Per usual, everything else channel for educational purposes only and is not intended as financial advice. Macro Monday, let's take a look at some charts here. Things are looking pretty good across the board. Crypto as well. We'll take a look at that towards the end. Some of the legacy crypto stuff waking up a little bit here. On the ETF flow side of things, we had plus 407 globally last week. That's 407 million. Where is that coming from? Most of that from iShares and Fidelity, Bitwise, ARK. A decent slug of that coming from other stuff, but it was mostly BTC, mostly US. This is why, again, it's pretty important to pay attention to what's going on in the US. That's where most of the volume is going to be. Looking at the 30-day cumulative flows, we are trying to hold some sort of bullish continuation here. I mean, it's subjective. It's sort of like wishy-washy, right? But what we don't want to see is a massive spike and peak trough situation. We want to see sustained buying like we did 2020 into 2021. And that's why we watch the ETF flows every week. Last night we had a decent bump higher. Currently it's around 66. I think as of recording the video last night, we were around like 62-ish. Based on the MSTR price and the BTC price, this could be Saylor stepping in. I don't know, right? We won't know until after the fact. I believe he still has the ability to sell MSTR using the ATM and then buy BTC. I don't know if it would happen as quickly as on a Sunday night, but for whatever reason, we are on the bullish side of things above the range once again, at least trying to. The next question is, can we close up here? Can we close anywhere up here? Can we not give it all back like we have every single time, right? Denied, 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 right? Can we not do that? Let's just start there. Can we just not get insta denied up here and start closing? That would be a big win for price ahead of the election, of course. Now, I don't want to bring this up because I want to bring this up. I'm bringing this up because it's a potential significant landmine. The TLDR in the story here is Meredith Sassaman, Len Sassaman's wife, potentially Len being Satoshi, has initiated a process to decrypt some laptops. There are some reasons why Len wouldn't be Satoshi. There are some reasons why he would be Satoshi. I'm hoping this is just FUD, but the issue is here, it is what you'd call real FUD. It's real enough where you can't really ignore it, and we have to see what happens here, because if those coins move for any reason, the market across the board is likely to get extremely angry. I'm not saying this is real. I don't think it's real. I hope it isn't real. But again, if you follow the timeline, if you know who Len is, it's possible that it's possible, and that's the problem. Okay, I'm not going to go into it any further. You can let me know in the comments, but basically they're going to try to brute force the file vault of the laptop or multiple devices and see what they can find. Before we go any further, on that happy note, let me mention today's video sponsor, the Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Last night we were talking about ENA. That broke out a little bit. TIA also looks ready to go. The problem with these breakouts is a lot of these coins have emissions or unlocks or things to pay attention to that it's like, yes, the TA was there. It broke out where you'd expect it to break out. Can it hold this level? I don't know. Is it pulling back because people are selling ahead of an unlock? I don't know. Are people just taking profit on what has been a pretty decent couple days here? 100% move basically in 3 days. That's a good move. It's hard to know. So if you're actively trading this, it's like, what do? Do you trust the TA? Do you pay attention to all the other nonsense? I don't have a great answer, but it's one of the reasons why, despite alts sometimes having great looking price structures, that things just end up going nowhere, or you get failed breakouts like this. And that, I'm not saying that this can't keep going, but it's just an unknown. You really don't know how much token supply is floating around out there for a lot of this stuff. And you of course have tons of bag holders who are down a significant amount. So it was there, it broke out, and here we are back at the neckline. On the legacy side of things, it is a bond market holiday today. So bond markets are closed, but there was legacy trading, of course. Outside of that, we have a bunch of Fed speak this week. I don't think there's any of these numbers are particularly important this week. I don't see anything, maybe US retail sales, but the big thing is jobs numbers towards the end of the month. That's what everyone's going to be paying attention to, along with the election, obviously. Looking at Trueflation, we have perked up a little bit here on Trueflation. Now, directionally, Trueflation has been essentially correct. Directionally, things have come down significantly, and we may get this weird crossroads where Trueflation is going to be higher than CPI because of the lagging housing component. Currently, the nowcast has CPI at 2.55, which would be an increase month over month. That would also be an increase from the current Trueflation data. But it certainly looks like for the moment, Trueflation has bottomed. Whether or not that's a rates effect, whether or not that's geopolitical, energy, right? We can go on and think about what this could be, what it could mean. What we don't want to see ultimately is runaway inflation. Inflation ranging from 1.5 to 2.5 is acceptable, but the markets, I doubt, will be very happy if CPI continues to increase. Now, I think the election is going to be more important than the CPI print in the near term for the market, just to have some finality there, not necessarily who gets elected, but that's going to be the bigger deal. So this will probably get buried a little bit because it's around election time. PCE also coming in around 2%. So of course, the doomer bears are going to love this. This is doomer bear bait. This is bear food, because for the first time in a while, we're seeing the potential for a rise instead of a drop in CPI. PCE and average hourly earnings have also gone up consistently. And obviously, if you are not a part of this category where you're getting wage increases, you are falling significantly behind. But that's why we have the average, right? Some people are higher, some people are lower. Depends on the job type. And if we paint everything with a broad brush, we can say, yes, average hourly earnings are outpacing PCE, which is a good thing. Looking at those economic releases, those dates, November 13th, that's obviously after the election. That's the next CPI print. The next jobs print is November 1st, ahead of the election. So those dates going to be very important for the market, for BTC, for risk assets, the jobs numbers more so than the CPI numbers. Here's the current outlook based on polymarket odds. And it is what it is, right? It's hard to read into this and say electoral college versus popular vote. Where do we stand? And you can just go down that rabbit hole. But this is where the market has the odds at the moment. And as far as interest rates are concerned by the Fed, we're still pricing in a 25 basis point cut. And I don't know. So this meeting is 11/7, and I don't know if a jobs data point where jobs are getting better, let's say we go from 4.1 to unemployment on to 4.0 or something like that. Is that enough to push this one way or the other? I doubt it. So it's very likely we're going to see a 25 basis point cut next meeting. Looking at the yield curve, looking at bonds, this week in the red, last week in the blue, the long end is rising, and this could be sniffing out the inflation expectations or the lack of taking inflation seriously by the Fed or whatever, right? We could justify this and say, why take the yield at its current level if inflation is back on the rise? And on the front end, we still have that expectation for the 25 basis point cut, along with a few other cuts throughout the rest of the next 6 to 12 months. Looking at the yield curve, the 10-2 is at this point fully uninverted. Jobs in the yellow here, unemployment at 4.1. So the question on November 1st, are we going to see the jobs print jump higher, jump lower? Is there going to be some seasonality component? Is there going to be some hurricane related job losses that are going to make this look worse? These are all things to think about. But the 10-2 definitely uninverted here. The 10-year 3-month, the preferred metric by Cam Harvey, the creator of the yield curve indicator, is still deeply inverted. And looking at GDP, we're back above 3% on Nowcast. We'll get another print on October 17th this week, but things look good. This does not look recessionary to me, but what do I know? I'm just a guy talking into a microphone. We can find stuff, as people have been, and say, okay, this is not so great, right? We could say, well, bankruptcy filings in the US are on the rise. Is this recessionary, or is this just long and variable lag? Is this just naturally part of the business cycle? Always something to think about when you're looking at data like this. Based on the NBER recession indicators, we're currently at a 0. So they are unlikely to declare a recession based on any data that they are seeing currently. On the liquidity side of things, liquidity globally curling up. The dollar strength is hurting liquidity here globally. But all in all, we are headed in the right direction on liquidity, as they say. Where we are not headed in the right direction is on the DXY, which continues to strengthen. And it is kind of odd that BTC alt's doing very well in the face of DXY, which continues to go from moving straight down to straight up. So definitely something to continue to be abreast of as that potentially moves to 105 at this point. And why not? You know, it's gone up 14 straight days. What's another week of bullish dollar? Gold also kind of stalling out up here. We've had a few Tenkan bounces at this point on the blue line. Losing the Tenkan wouldn't be the end of the world, but it would mean that momentum certainly starting to fade and starting to wane. I would think if inflation expectations were rising again, we'd see gold moving ahead of that, but maybe gold has already moved as much as gold can this year. I don't really see a trade here. I don't really see any bearish signs here. It's just, you know, you got to watch out for, will this break the Tenkan? Will it retrace to 2,500? It's still very much bullish. It's still very much above the cloud. It looks good. It's just, I don't think there's an immediate trade to be taken there. This was another chart that made the rounds this week. The bears, of course, loved it because look at 2000, look at 2008, look at all these terrible things that happened when households were allocated this much to equities. And that's one thing you can say. You can say that. And you can also say, well, we're at all-time highs, equities are, and they're pushing all-time highs almost every week. So why wouldn't this be the picture? Despite the $6 trillion on the sidelines as a percentage, the cash slice, the cash allocation for households is still very, very small. So bullish or bearish, you're going to find something for you there. If we measure the S&P 500 bull markets, there's also this question, what inning is it? How deep are we? How much further can we expect, both duration and percentage-wise? So Jeff has stacked these up, and we're on par with previous bull markets. And surprisingly, we potentially have a ways to go when you compare this to the 78 to 2000 bull market. So again, if you got the bearish goggles on, you're saying, okay, there's weekly bear divs. It's parabolic on the weekly. This thing has to break down. And if you're bullish, you're just saying, well, bull market's average last X number of days or years. And we still have potentially another year or two in this current move. Putting it all together with the interest rates and the S&P, tons of these charts floating around that if we avoid a recession, the next 12 months should be bullish. Even if we have a recession, things aren't particularly super bearish. They're flat. They're not number go up, but certainly not as doomer maybe as some of the bears would hope in a recessionary period. And we're certainly potentially on track for just bullish continuation. That's what it looks like when we get highs like this week over week. As far as earnings this week, some financials, some banks, insurance in Progressive there, some biotech, Netflix, of course, on Thursday, but most of this is financial earnings this week. Looking at the S&P today, another new all-time high. Very likely to close up here at a new all-time high. It looks ready to go for 6,000. No bear div on this either. This is a new high, a new local high in RSI for the first time since the breakdown. So there's really not much here to be bearish about, other than maybe a rising wedge type of chart pattern forming and or formed. You can sort of visualize it. Here's the bottom, here's the top, kind of breaking out of that rising wedge. But so far so good. Really nothing to complain about. And the Qs not at all-time highs yet, but they look fine. I don't see a great trade here, just as I've said kind of for weeks now, despite the S&P just moving higher anyway. I don't really see a great trade on the Qs. I think on the individual names, there are tons of trades to be taken, but on the index, my guess is most people are just DCAing that anyway. So what do they care? Even DJI has hit a new all-time high today. So all-time highs are not bearish for the people who think they are. They just aren't. We're not bearish until we break down. We're not bearish until we start making lower lows instead of higher highs. Now we can say, well, there's another rising wedge. There's all sorts of concerns for X, Y, Z, but that is not what the prices are telling you here. We're not even neutral like we were in the beginning part of the year. This is very much bull territory, 100%. some of the individual names. This is AVGO. Had a request for this one. Looks like a generic W. Looks like it's ready to go. Coming off of a fresh, choppy consolidation. So I have no qualms with that one. Just like I have no qualms with NVIDIA. It looks very similar. W looks ready to go. Looks ready for new all-time highs. No real issues there. And if NVIDIA is pushing higher, that should push semis higher, which it is. This is SMH. And that should push the Qs eventually higher. SMH trying to maybe break out of an ascending triangle here and or finally cancel out this mega head and shoulders that it could have broken down from at around 210. But as it sits here, it's ready to flip the cloud bullish again. It's ready to continue. So if there were things to be bearish about, we would see it on the technicals. And I just don't. Here's just, again, a random sort of crypto adjacent chart. This is Nubank. Large up move today, back near all-time highs. And a lot of charts just continue to inch higher and higher and higher into all-time high territory. That's just not a bearish thing. It's just not. Here's Roblox, which had the short report last week from Hindenburg. Very large wick on that candle. On the daily cloud, it's potentially going to close in the daily cloud. On this high time frame chart pattern, you'd certainly want to see it hold the midpoint of the diagonal there. Maybe even consider adding here, depending on your feelings on the short report. But I think overall it still looks fine for a potential ascending triangle breakout here down the line. And now as we talk about some of the crypto stuff, BITX on the daily looks okay. Looks ready maybe for a cloud breakout. The cloud not completely bullish here, but certainly not bearish. We're not making lows anymore, at least recently. A little bit of a scare there in the 58K temporary stop run, I guess. But since then, things have looked very good. So this is something to watch out for those of you that trade that. And BITX on the 4-hour, also the most bullish it's been on the cloud for a very long time. Last time we were this bullish was May-June territory, but it's getting harder to deny how bullish all this looks to me. This is MSTR on an ultra low time frame. MSTR pulled back a bunch today, which could be sailor selling the MSTR to buy BTC down the line. I don't know. This could just be ARB traders stepping in. It could be shorts stepping in. Could be a bunch of stuff. I closed out some of my position from July that I had been accumulating today at around 205. It opened at 220, 230, I don't know, whatever it was, and pulled back. So definitely watch for some news on what happens there if you're actively trading this. But as far as the technicals are concerned, I like a diagonal support somewhere down here, maybe sub 200, 190. We'll see what happens. You definitely want to avoid the head and shoulders possibility, but that's down the line. We'd see that within the week here playing out on the hourly. So zooming out, I think it looks fine. It's just clearly, something's happening today with MSTR going in the opposite direction of the rest of the market. Now, to be fair to MSTR, the NAV exploded at the end of the week last week, whereas the market didn't do much of anything. Looking at the miners, looking at WGMI, right there at that 20 level, very clean, inverted head and shoulders, clean, potential upcoming Kumo breakout here. HUT, very similar. Hard to deny a chart pattern. Regardless of how I feel about any of these companies individually, the technicals are there. This is Mara, same thing, inverted head and shoulders. And oh wait, that's not a miner, that's Google. Now here's a Google IHS. Now is it just the market being the market, or are these charts moving more independently? I don't know. I don't really think it matters, but there is a lot of this going on right now on alts, on miners, and for whatever reason on Google. Also looks good for a potential move above 170. They've got a lot of legal stuff they're going through right now, but in a vacuum, chart looks decent. Even CleanSpark has pulled up quite a bit. Coin pulled up quite a bit over the past couple of days. So even some of the deep laggards starting to turn the corner, starting to turn around. Probably most importantly, IBIT, just if you're looking at IBIT, you don't care about anything else, or for whatever reason you don't look at spot, just looking at IBIT, making that higher high once again, potentially holding this higher high, potentially holding on to the first higher high since inception, really. We've had nothing but lower highs since March. That you'd think would be fairly important to some people paying attention. Cloud also on its way to making a bullish turnaround there. So overall, we're doing what we need to do to give more and more people increasing confidence that we're actually going to hold on to these highs. I would love to just hold 66 for the week, see what happens, and then go from there. I really don't know how much we're going to see pre-election, but hey, anything's possible. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.